The Clash of the Cultures: Investment versus Speculation, by John C. Bogle. Forward by Arthur Levitt, former chairman, U.S. Securities and Exchange Commission. This is a book summary. In today's video, we're diving deep into The Clash of the Cultures: Investment versus Speculation by the legendary John C. Bogle, the founder of Vanguard and the father of index funds. This isn't just a book, it's a battle cry for the everyday investor. Bogle pulls back the curtain on Wall Street's dark side, exposing how speculation has overwhelmed true investment. It's a story of how a culture of long-term value creation was hijacked by short-term profiteers, transforming our financial markets into what Bogle calls the Wall Street casino. As Bogle reveals, Wall Street's mission of capital formation, the noble goal of funding the future, has been abandoned in favor of a high-octane game of buy and sell. It's a system where the house always wins, and the average investor doesn't stand a chance. But Bogle doesn't just leave us there, staring into the abyss. No, he's a guide through the chaos, with 60 years of battle scars from the front lines of finance. He doesn't just explain how we got here. He shows us how to fight back. His solution? Strip away the costs, the complexity, and the hype. This book is a wake-up call, a survival guide, and a manifesto all rolled into one. So, if you're tired of feeling like Wall Street's deck is stacked against you, if you're ready to take back control of your financial future, then grab your popcorn, settle in, and let's get started. Chapter 1: The Clash of Cultures. Our story kicks off with a battle, a clash of cultures. On one side, we have the traditional culture of long-term investment, a world where patience, careful analysis, and the belief in a company's potential to grow and thrive define the path to wealth. It's a culture rooted in stewardship capitalism, investing not just to profit, but to build something real, something lasting. This is the world John C. Bogle champions, where investors are the true owners, and their gains come from the success of the businesses they support. On the other side, a very different culture has emerged, a fast-paced, ruthless culture of speculation, obsessed with short-term profits and lightning-fast trades. It's a world where traders are more like gamblers in a high-stakes casino, where algorithms and high-frequency trading dominate, and where stocks are bought and sold in microseconds, not to own a piece of a business, but to squeeze out a profit before the next guy does. Bogle doesn't just see this as a problem, he sees it as an existential threat to the very foundation of investing and to the financial well-being of everyday investors. Bogle warns that speculation isn't just creeping into the financial world, it's taking over. He exposes how Wall Street has shifted its mission from funding businesses and driving economic growth to feeding a speculative frenzy that benefits insiders at the expense of everyone else. He paints a vivid picture of how this shift is hurting not just individual investors who find themselves outmatched and outgunned, but the entire economy, which suffers when capital is misallocated and genuine growth is sacrificed for the next quick buck. In Bogle's words, Wall Street's mission of capital formation, the noble goal of funding the future, has been hijacked, turned into a game of hot potato, where the only goal is to pass the risk before it blows up. Bogle takes us back, tracing the roots of this transformation. He shows us how the rise of institutional investors, high-frequency trading, and complex derivatives has changed the game. How financial innovations that were supposed to make markets safer and more efficient instead turned them into a minefield for regular investors. As Bogle reveals, it wasn't just greed, it was a fundamental change in the culture of Wall Street itself. A shift from stewardship to salesmanship, from managing risks to taking them, from investing for the future to speculating on tomorrow's headlines. And this, Bogle argues, is the real clash of cultures: investment versus speculation, builders versus bettors, the future versus the next 5 minutes. Chapter 2: The Double Agency Society, a world where corporate managers and investment managers are supposed to act as guardians of everyday investors' wealth, but instead pull the strings for their own benefit. It's a shadowy system where the real owners, ordinary investors like you and me, are kept in the dark while those in power pocket hefty fees and bonuses, chasing short-term gains at the expense of long-term value. John C. Bogle exposes this dark underbelly with brutal clarity. He describes how these powerful agents have transformed from stewards to profiteers, more concerned with boosting quarterly results and securing their own bonuses than with safeguarding your hard-earned money. It's as if you hired a guide to lead you through a treacherous jungle, only to find out they're the ones feeding you to the lions. Corporate executives focus on inflating stock prices to cash in on their options, while investment managers trade recklessly to inflate their fees. Meanwhile, the real owners, the investors, are left to watch as their long-term wealth is chipped away. Bogle calls this the happy conspiracy, a cozy relationship between corporate management and Wall Street that works great for those on the inside, but is a disaster for the rest of us. In this world, mutual funds, which should have been the vigilant guardians of your investments, have become passive spectators. With trillions of dollars under their control, they have the power to challenge corporate excess and demand accountability. But they stay silent. Why? Because many of these funds are owned by the same financial conglomerates that profit from these excesses. It's a conflict of interest that would be laughable if it wasn't so devastating. The numbers tell a chilling story. Bogle reveals that institutional investors now control 70% of US stocks, flipping the balance of power completely. This shift was supposed to empower investors, to make corporations more accountable. But instead, it's done the opposite. Investment managers, pressured to beat the market each quarter, resort to rapid trading and short-term bets. And every trade means more fees, billions siphoned from investors to brokers, bankers, and fund managers. But Bogle doesn't just criticize, he calls for change, demanding that these institutions act like true owners, not renters looking for a quick payday. He argues for a return to stewardship capitalism, where investment managers see themselves as fiduciaries with a moral and legal duty to act in the best interest of their clients. This means voting shares to support sustainable long-term growth, demanding transparency from corporate boards, and putting an end to the relentless chase for short-term profits. It's a call to arms for everyday investors to demand more, to challenge the status quo, and to refuse to be pawns in Wall Street's game. Bogle's vision isn't just about changing how we invest, it's about changing what we stand for as a society. A society where owners act like owners, not gamblers. Where investing is about building something real and lasting, not just passing the hot potato before it explodes. So, how do we break free from the puppet strings of the double-agency society? Can we turn the tide and reclaim Wall Street for the true investors? Stick around, because in the next chapter, we're exposing the silence of the funds and why it's time for them to finally speak up. Chapter 3. The silence of the funds. It's the kind of silence that fills a courtroom when the one witness who could expose the truth refuses to speak. Mutual funds manage trillions of dollars, our dollars, and yet, when it's time to challenge corporate decisions that clearly hurt investors, they sit quietly, arms folded, eyes averted. It's a silence that echoes through boardrooms, one that speaks volumes about where their true loyalties lie. John C. Bogle doesn't mince words. He reveals how mutual funds, instead of being the vigilant watchdogs investors need, have become part of a financial aristocracy, billion-dollar entities owned by the very financial conglomerates whose practices they should be challenging. Imagine hiring a lawyer to defend you in court, only to discover they're secretly on the payroll of the other side. That's the betrayal Bogle exposes, where fund managers vote with corporate management 95% of the time, rubber-stamping executive compensation packages, and dubious deals that drain value from shareholders. Money. Many mutual funds are owned by the same financial giants who profit handsomely from corporate America's excesses. Speaking out against these practices would mean biting the hand that feeds them and risking a flow of management fees that amounts to tens of billions of dollars each year. So, instead of holding corporations accountable, they turn a blind eye, whispering "I" to every boardroom proposal, no matter how outrageous. Bogle shares a story that's all too familiar. Executives raking in millions in bonuses, even as their companies falter, corporate boards handing out golden parachutes while stock prices plummet, and mutual funds silently approving it all. It's a rigged game where the rules are written by the insiders, for the insiders, and where the average investor, the real owner, is left powerless and unheard. But Bogle isn't just a critic, he's a crusader. He argues that mutual funds must finally break their silence and act like true owners, not passive bystanders. This means voting against excessive executive compensation, demanding transparency, and pushing for decisions that build long-term value instead of short-term profits. It means putting their fiduciary duty first, not just in name but in action. Bogle's vision is nothing short of a revolution. He calls for mutual funds to disclose how they vote on corporate resolutions so investors can see if their dollars are being used to support their interests or betray them. He demands that fund managers be held accountable, that they prove they are worthy of the trust investors place in them. After all, as Bogle reminds us, it's our money they are managing, not theirs. It's about whether the trillions of dollars in mutual funds will be used to challenge corporate greed or to feed it. So, how do we make sure the funds finally speak up? How do we turn this silence into a roar that Wall Street can't ignore? Chapter 4: Sales over Stewardship. Bogle takes us deeper into the rabbit hole, exposing how mutual funds shifted from stewardship to outright salesmanship, where flashy brochures and high-pressure sales pitches replaced the quiet discipline of long-term investing. It's a world where funds are marketed like the hottest new gadgets, promising outsized returns and exclusive access to market-beating strategies. But just like those late-night infomercials that promise miracle weight loss, the reality is far less impressive. Instead of protecting investors' money, many mutual funds became obsessed with one thing: gathering assets. The more money they manage, the more fees they collect, no matter how the funds perform. So they started chasing trends, launching funds focused on the hottest sectors, from tech stocks in the late 90s to subprime mortgages in the 2000s. It didn't matter if these funds were destined to burn out like shooting stars, as long as they brought in billions first. Imagine a doctor who prescribes pills not based on what's best for the patient, but on which drug company offers the biggest kickback. That's how Bogle describes today's mutual fund industry. An industry where fund managers, instead of safeguarding investors' money, are rewarded for taking big risks and beating short-term benchmarks, even if it means their funds crash and burn a few years later. In fact, Bogle reveals a shocking truth. Over the long term, most actively managed funds underperform the very markets they're trying to beat, especially after you subtract the hefty fees they charge. But Bogle's not just about doom and gloom, he offers a way out, a secret passage through the madness. His answer? Low-cost index funds that track the market instead of trying to outsmart it. In 1975, Bogle launched the first ever index mutual fund, the Vanguard 500 Index Fund. Critics called it Bogle's folly, saying no one would invest in a fund that didn't try to beat the market. But Bogle knew something they didn't. By keeping costs low and sticking to the broad market, investors could capture the full return of American business without paying for the privilege of losing. And Bogle was right. Over the decades, the Vanguard 500 Index Fund didn't just survive. It thrived, growing into the largest equity mutual fund in the world. Its secret? Simple, long-term investing, the kind that ignores Wall Street's hype and focuses on what truly builds wealth. The steady growth of real businesses. No market timing, no trendy sectors, just broad diversification and rock-bottom costs. Bogle's message is as powerful as it is simple. The less you pay in fees, the more you keep for yourself. His research showed that the average mutual fund investor loses about 2 to 3% of their annual return to fees and costs, small percentages that add up to massive losses over a lifetime. By cutting these costs to the bone, index funds let investors keep more of what the market gives them. No gimmicks, no gotchas. He calls them the only real get-rich-slow scheme in finance. And that's the point. Real investing isn't about getting rich quick. It's about building wealth methodically, year by year, decade by decade. It's about tuning out the noise, ignoring the hot funds and the latest fads, and staying the course. So if you're tired of Wall Street's empty promises, if you're ready to escape the casino and start investing for real, fire your stock pickers, embrace index funds, and let the power of compounding do the rest. Because in a world of salesmen, being a steward is the ultimate rebellion. Chapter 5. The Retirement System Train Wreck. It's a crisis that's been years in the making, one that's been quietly building momentum, like a runaway train hurtling down the tracks, faster and faster, with no one at the controls. With Social Security under threat, pension funds chasing unrealistic returns, and 401ks turning into a high-stakes guessing game. The average American is caught between a rock and a hard place, praying they don't run out of money before they run out of time. Bogle pulls back the curtain on this looming disaster with cold, hard facts. Social Security, the bedrock of America's retirement system, faces a funding shortfall that could lead to cuts as soon as the 2030s. For millions of Americans, that would mean a significant drop in income just when they need it most. But that's just one car on this runaway train. Pension funds, both public and private, are making promises they can't possibly keep, projecting returns of 7% to 8% in a world where safe investments offer barely a fraction of that. In reality, Bogle argues, these pension managers are playing a dangerous game of chicken with the future. To hit their lofty targets, they're taking bigger and bigger risks, pouring money into private equity, hedge funds, and exotic financial instruments that promise high returns but deliver sky-high fees. It's like a gambler doubling down to chase their losses, except the chips on the table aren't theirs, they're yours. Bogle warns that if these bets go wrong, it won't be the fund managers who pay the price, it'll be the retirees who are counting on those promises. And what about 401k, the so-called savior of retirement? Bogle doesn't hold back. He describes them as a great idea gone horribly wrong. A system where millions of Americans are forced to become their own investment managers, picking funds, timing markets, and guessing how much to save. Most are woefully unprepared for the task. In reality, 401ks have become a goldmine for Wall Street, raking in fees and commissions, while the average participant struggles just to keep up. As Bogle points out, it's like telling people to perform their own surgery without medical training, then charging them for the scalpel. Bogle calls for straightforward reforms. First, we need realistic return expectations. Stop pretending that the glory days of 10% annual gains will return anytime soon. Aim lower, save more, and build portfolios that can withstand the inevitable storms. Second, we need a more balanced approach to investing, one that's less about shooting for the moon and more about securing a safe landing. That means broad diversification, low costs, and a focus on the long term, not the next quarter. But Bogle knows that reform won't come easy. The Wall Street machine won't give up its golden goose without a fight, and politicians, knee-deep in campaign contributions, aren't eager to rock the boat. Until we see those changes, Bogle argues, it's up to us, individual investors, to protect our own futures. That means ignoring the noise, avoiding the high-fee traps, and embracing the simple power of low-cost index funds. Chapter 6. Investing versus speculation. So, what's the difference between investing and speculation? Bogle breaks it down with a clarity that slices through Wall Street's fog of jarring. Investing is about owning a piece of a business and sharing in its long-term growth, like planting an apple tree and watching it bear fruit year after year. It's about patience, discipline, and believing in the power of compounding. When you invest, you're not just buying stocks, You're buying the future cash flows, innovations, and growth of real companies. Speculation, on the other hand, is about buying and selling stocks based on short-term price swings, like betting on red or black at the roulette table. It's the thrill of making a quick profit, the dopamine hit of watching a stock tick up. But as Bogle warns, for every winner in this game, there's a loser, plus the house, Wall Street, takes its cut every single time. But Bogle's solution is as radical as it is simple. Go back to basics. Buy broad market index funds, hold them for the long run, and ignore the noise. By focusing on the entire market instead of trying to pick individual winners, index funds capture the full return of American business with minimal costs. It's like saying no to the casino and yes to the slow, steady growth of a farm. And just when you think he's done, Bogle wraps up with 10 simple rules for investors, a playbook to help you stay the course when everyone else is losing their heads. His number one rule: embrace the power of reversion to the mean, the idea that markets eventually return to their historical averages. Bogle illustrates this with stories of high-flying funds that soared in the 90s only to crash and burn in the 2000s, leaving investors devastated. It's a powerful reminder that in investing, the tortoise truly does beat the hare. Markets surge and stumble, but over the long haul, they march upward. Bogle's advice: ignore the booms and busts, keep adding to your investments, and trust that the market's long-term trend will lift you higher. His other rules are just as straightforward. Stay diversified, minimize taxes and costs, and never try to time the market. Bogle's approach is all about stripping away the distractions: market forecasts, hot tips, and financial gossip, and focusing on what truly matters: buying broad, holding long, and keeping expenses low. Bogle's philosophy is grounded in a deep belief in American business. He argues that by investing broadly and holding on through thick and thin, you're placing your faith in the resilience and ingenuity of America's greatest companies. It's a message of optimism and resolve, a call to believe that, despite all its flaws, the American economy will continue to innovate, grow, and create wealth. So there you have it. In a world where high-frequency traders and hedge fund managers seem to have all the advantages, Bogle's strategy proves that you don't need to beat the market to win. You just need to join it, and do so at the lowest possible cost. Bogle's legacy isn't just the index fund, it's the idea that finance doesn't have to be a zero-sum game, that regular investors can win by rejecting Wall Street's high-cost hype and embracing the power of long-term compounding. It's a vision of capitalism where investors aren't gamblers but partners in growth. So, if you're ready to leave the casino behind and start building real wealth, take Bogle's advice: buy broad, hold long, and tune out the noise. Because when it comes to investing, slow and steady truly does win the race. If you found this video helpful, make sure to hit the like button, subscribe, and drop a comment with your thoughts. And remember, when it comes to investing, the best rewards go to those who stay the course. Thanks for watching, and until next time.